Welcome back to the channel, guys. It's great to have you back, and I am glad to be back. And it is taking a little. The markets are taking a little bit of a dip back down. So, but nothing to worry about, nothing to fear. We've got great news for you guys today, and we're going to cover some very interesting fundamentals, some news, and I'm going to highlight one of the most interesting projects out there. I know I've been highlighting Nervos, which is a very exciting project, but today I wanted to talk a little bit about CARTESI. So, 103% gains today. So definitely something to keep an eye on, and definitely something we all need to talk about. So, in a recent interview, former Goldman Sachs executive Raul Paul says that he is seeing a developing macro setup that could potentially blast Bitcoin and other crypto markets into the stratosphere. Many economists have recently been speculating on the future potential of a weak global economy and how this economic turmoil could serve as a catalyst for the growth of the digital asset market. In an interview with the Breakdown host Nathaniel Whitmore, Raul Paul explains how a weak global economy could serve as a catalyst for the growth of the digital asset market. He went on to say that the macro setup is, I think, global growth comes out weaker for the next 9 months. And I think that the Federal Reserve, even if they talk about tapering, will end up accelerating quantitative easing. That's how I think this plays out. That's what the bond market is telling you. Once crypto markets sniff this out, they're going to explode. What we've got is a macro that's potentially there. If you've been in the crypto space for a while, you know that the macro stories and macro trends develop slowly. It is usually tracked by watching monthly and quarterly data. If we do see a global slowdown in the economy, we need to look at around 3 months into the future. And according to Paul, the slump in the global economy could force some of the largest central banks to cut interest rates or engage in another round of money printing. He went on to say that we'll probably have the Bank of Japan having to print for the reasons we've just talked about, that Japan's totally screwed up the virus. They will do it in size. The Chinese economy is in the toilet right now. They will probably do something. So we've got stimulus coming out of Asia. Does the Fed do more? Do the Europeans do more? Generally, they have. They've generally cut rates twice after every recession, so they're likely to do it again for a number of technical reasons. The macro guru says that the combination of loose monetary policies and crypto sound money properties offers the perfect setup for the continuation of the bull market. So we have rate cuts and this perfect setup with no supply and demand right smack in the middle of an exponential bull market. You just don't get these often in your life. So let's talk a little bit about those opportunities.
Welcome back from Boston, USA. Hit the like.
So I just wanted to start today's video by saying, please hit that like button for me. Help get this video out to other investors. And I really appreciate all you guys subscribing to the channel. I will not let you down. Please let me know if there's something you guys want me to talk about. Just hit me up in the comments or check out my Reddit page on OnChain-Analysis at Reddit. So I just want to give a quick update on the crypto amendment that was voted on today. It appears the Senate rejected the amendment favored by the crypto lobbyists that apparently called for exempting non-custodial crypto actors from a crypto tax reporting requirement that was apparently built into the $1 trillion infrastructure bill. Apparently, the amendment failed after Senator Richard Shelby attempted to tack on a $50 billion military infrastructure spending to the bill. And he then refused every amendment after that as he whined and cried like a widow baby on the Senate floor. And the original language of the bill changed tax reporting requirements to define certain actors involved in digital assets as brokers for tax purposes. This would require them to file a 1099 tax form with the IRS on behalf of customers, even if they did not have access to such information. Cryptocurrency industry advocates had argued that the bill's language was too broad and put a chill on innovation. After putting forth rival amendments last week, the senators behind those amendments agreed on a compromise Monday morning. The Toomey, Warner, Loomis, Sinema, Portman amendment made clear that non-custodial actors such as Bitcoin miners, validators on proof-of-stake networks, and valid providers and some protocol developers would not be included in the bill's reporting mandate. While the vote needed unanimous consensus to pass, Shelby voted nay and killed the whole thing. Now the bill will be voted on again tomorrow morning, and if passed, will go to the House of Representatives. So let me just touch a little bit on Bitcoin while we're So a major risk-on signal for Bitcoin has just flashed as the king surpassed $46,000 for the first time since May. The critical thing to note here is that Bitcoin's move above its 200-day moving average, which is currently sitting at around $44,982. So this is a critical point. So as any weathered crypto enthusiast knows, this is the perfect spot for buying Bitcoin since the average gain is usually close to 180%. So Cardano in the charts today, Cardano price closed in the green last week with a gain of over 8.5% and recorded the third consecutive positive week in a row. Let's see. Let me just break out into some of the higher time frames here so we can get a better perspective. So ADA had broken from a symmetrical triangle pattern and registered a daily and weekly close above the strategic 2018 high of around $1.40. The 50-day SMA had turned higher, introducing credible support for the new rally. Cardano price printed a daily close above the 2018 high on August 6th, marking the first time since July 7th and establishing a basis to extend the rally beyond the July 4th high of $1.50, which basically confirms the bullish measured move of its symmetrical triangle. Moving into the week ahead, ADA needs to confirm the rise above $1.40 with a daily close above $1.50 before investors can confidently adopt a bullish narrative for ADA. Since July 21st, Cardano price has climbed well over 40%. The measured move of the symmetrical triangle is almost around 22% and basically aims the ADA price towards the target of around $1.74. The outlook for ADA is hot green as it forms the bullish golden cross pattern on the 6-hour chart and increases its momentum for higher gains. The last golden cross we saw on the 6-hour chart was printed in November 2020 before it saw an 80% jump north. If Cardano price does gain additional upside momentum from the golden cross, ADA has the potential to test the June 3rd high of around $1.89, representing a gain of over 28% from the current price. A daily close below the 2018 high introduces a challenge for the developing bullish narrative. Thus, it is essential that Cardano price sticks above the $1.40 or risk defining the top of another failed ADA rally above the critical level, as was the case in early July. With the rollout of smart contracts and over 70% staked, chances can be in favor of the bulls pushing us ever higher, unless the King Bitcoin decides to take a dip into bearish waters. So that's the update from the market. And I just use ADA because ADA is pretty much mirroring a lot of what the other coins are doing out there. Obviously, Ethereum up to $3,124 and still climbing. Ethereum, we're just going to continue to go. I think, with the state of the economy and the bullish narrative going out around the London 1559 protocol, I think I think Ethereum continues to, fares to do well. But I would be mindful that there can be a sell-off that could spiral out of control. We have seen that in the past. So just be careful out there. If you are investing, there could be a brief decline or an extended decline depending on who trips the avalanche, so to speak. So I'm going to jump into a project I wanted to cover today because the CARTESI platform. So today's crypto of the day is CARTESI, as it has just seen gains of more than 100% in the past 24 hours. You heard me correctly. 100% in the past 24 hours. Actually, it was 103%. So I wanted to spotlight this project today so you can make the best decisions with your money. One of the most notable features of this project is how the team approaches development. They call themselves an off-chain decentralized computation platform, and the platform allows developers to code smart contracts using the Linux operating system, which comes with a robust infrastructure of mainstream software programs. According to the CARTESI team, this means its offerings help unlock a new future for decentralized dApps. So one thing I wanted to note about CARTESI, Linux in general is a programming language, for those of you who might not know, and it's used in everyday software applications that you find in just about everything on the web. If it's either Microsoft or it's Linux, right? So interesting that they chose to make it Linux compatible, which does allow many developers from other fields to kind of dive into blockchain. So, and beyond its appeal to developers, it seems there are a few specific catalysts helping to lift the CTSI crypto today. So here's what you guys need to know about CARTESI. The CARTESI project has been around since 2018 when Eric Demora, Augusta Teixeira, Diego Nahab, and Colin Steele founded the project. The team defined the CARTESI project as a layer 2 scaling infrastructure that works with Linux, which seeks to bring more seasoned developers to the world of blockchain. CARTESI currently offers 3 products that align with its goals. These include Descartes, Descartes Rollups, and No Ether. Descartes allows developers to complete heavy computations on a Linux virtual machine with the added benefit of blockchain verification. The Descartes rollup feature is meant to be a more scalable smart contract solution for Ethereum. Lastly is No Ether, which is a sidechain project that allows dApps to temporarily move and store files for lower fees. No Ether is a tie-in to the CTSI crypto. It is its native token. According to CARTESI, CTSI is important because it creates a sense of security and transparency in its proof of stake algorithms. Users can stake their CTSI and mine rewards with No Ether as well. It seems that one of the catalysts for the 100% plus gains came from increased accessibility. The CTSI crypto is now available on the Kraken exchange. I think it's also available on Coinbase and a bunch of other exchanges as well. The CARTESI mainnet is a proof of stake system in which stakers and operators will be able to gain CARTESI tokens in exchange for running network nodes to bolster security in the infrastructure. Let me just go over to their website right here. And in order to participate in CARTESI's proof of stake network, users will be required to continuously run a node. When properly executing CARTESI's reference software for proof of stake, users will participate in a lottery to select the block producers. Each user will be selected at random with probabilities that are proportional to the number of tokens that they have staked. Once selected, the users will receive a block reward that will be extracted from the mine. It is important to recognize that any failure of the node's availability or connectivity can result in the user losing the corresponding reward. However, the proof of stake system does not include slashing. Therefore, there is no risk for the user to lose their stake tokens due to such failures. Let's see here. According to the project's publicized token distribution, is 25% of the total supply of CTSI has been set aside for mine reserves. These tokens will help bootstrap the staking participation rate until the fees paid by the network users become large enough to sustain an appropriate staking rate. As the CARTESI project progresses further with their roadmap, more and more of these tokens will be made available through different batches that will be individually announced to the community. Let's see. I wanted to talk a little bit about Rollups, but before I jump into Rollups, I wanted to talk a little bit about the tokenomics of CTSI because they are just as interesting as the product as the project. Total CARTESI token supply is fixed at 1 billion. The fund. To fund the CARTESI platform, CARTESI conducted 4 sales in which 17.67% of the total supply was allocated to raise $2.3 million. The distribution of these 4 sales is as follows. There was a seed sale, which comprised of 2% of the total supply. The first unlock happened in April 2021, where 0.3% of the total supply was released. From there, unlocks will happen on a quarterly basis. There was a private sale that comprised 5% of the total supply. The first unlock happened in April as well, where 0.56% of the total supply was released. From there, unlocks happen on a quarterly basis. There was a strategic sale that comprised 0.67 of the total supply, in which 0.51% of this allocation was unlocked in December 2020. There was a Binance Launchpad sale, which comprised 10% of the total CTSI supply and has been fully allocated. There was no vesting. The rest of the tokens are allocated to the team at 15%, advisors 2%, foundation reserve 40%, and mining reserve 25%. The release schedule of these tokens is as follows. The team tokens will be released twice a year in the amount of 2%. The first unlock will occurred in April 2021. And the foundation reserve, out of the 40%, 9.1% was released upon distribution. Subsequent releases will occur on a quarterly basis. So, so there's been some interesting recent developments in the CARTESI project. So the CARTESI Labs Accelerator program which aims to bring projects built on CARTESI to the next level. For those leveraging CARTESI products, the CARTESI Labs Accelerator Program basically provides investments to developing projects, and the team provides supports that will accelerate each product's growth. The CARTESI team has been developing decentralized gaming solutions as well, and has been working hard behind the scenes to bring gaming solutions to their platform. In a recent tweet, CARTESI team members joined Polygon to offer an AMA on how the pair will disrupt the gaming industry. The crowdcast was aired on August 4th on crowdcast.io. On the same day, Blockchain Game Alliance announced their partnership with CARTESI for a fully decentralized poker game. So it was a fully decentralized poker game without using Solidity. Their break from Ethereum network is becoming more and more prevalent as time goes on. CARTESI is a multi-chain layer 2 infrastructure that enables complex computation outside the blockchain via their side chains. The CARTESI team announced their Rollups solution on July 29th in this tweet. In their blog that was linked in that tweet, and let me just click on it here. I'll just go over to this blog. So Rollups, and you guys probably have heard of Rollups before. So I'm going to touch a little bit on it. I'm going to try to keep it simple, but basically, in their blog, they stated that the current Ethereum architecture is not ready for mass adoption, with gas fees fluctuating wildly, sometimes reaching such prohibitive heights that the network gets gentrified and entire dApps become effectively unusable. The infamous scalability problem has been proven very hard to solve without compromising on security and decentralization. CARTESI's roll-up solution is gaining more and more traction and support, becoming almost universally considered to be one of the key scalability solutions for Ethereum's woes. Vitalik himself recently suggested a roll-up-centric roadmap for Ethereum that is on a chalkboard in the Ethereum basement at Vitalik's log cabin headquarters in Canada. Basically, the CARTESI rollup enables scalable smart contracts built with mainstream software stacks. So what are rollups? To put it simply, rollups achieve scalability by moving the bulk of the computation outside the blockchain, using the ledger as a data source, but not as an execution environment. As such, the rollup solution contains both off-chain and on-chain components. Users interact with a rollup through Ethereum transactions. They send messages or inputs that define a computation to be processed and advance the state of the rollup's machine. Basically, from there, interested parties run off an off-chain component that watches the blockchain for inputs. This is a huge but. Checkpointing a state on chain has to be done responsibly, which is guaranteed by the on chain part. It is important for me to differentiate between two possible ways to gatekeep state updates, because they can be validity proofs and fraud proofs. Now, for the less attentionally inclined, the rest becomes technical jargon and probably won't be interesting to the common trader. So I will make this as easy to understand as I can. In the validity proof schemes, every state update comes accompanied by a cryptographic proof, which is created off-chain and basically verifies its validity. Many of you guys probably have heard zero-knowledge proofs. Are frequently used for this, which is why these types of rollups are usually referred to as ZK rollups. While validity proofs bring the benefit of instant finality, generating ZK proofs for general purpose computations is, when possible, immensely expensive, and each on-chain state update must pay an extra gas fee. So the other option is fraud-proof schemes work by a different fraud-proof schemes, which work by a different paradigm. State updates come accompanied by proofs, and they are proposed. And if they're not challenged, they are ultimately confirmed on chain. Using a process called interactive fraud proofs, where two actors, a claimer and a challenger, partake in something similar to a verification game, where they assume that any state updates will most likely be honest because they are tied to financial incentives and are often called optimistic rollups. So this so-called optimism rewards financial incentives for honest behavior. So CARTESI chose to create optimistic rollups with interactive fraud proofs. The interactive model was chosen because it imposes a higher ceiling to the size of computations that can be executed. With CARTESI rollups, the team is essentially tackling an additional scalability aspect called social scalability. So that's sort of the whole roll-up thing in a nutshell. Basically, CARTESI was founded on the idea that developers should be able to build their dApps using mainstream software stacks, libraries, and tools they're used to. Their goal is to bridge the gap between day-to-day and blockchain developers. They want developers to build impossible dApps, the ones that need complex and powerful software stacks. So there you have it. If you want more information on the CARTESI project, I suggest you mosey on over to their Twitter page and check out the links into their blogs. There is a wealth of information to dig your curious teeth into. They also have a very active Telegram and Discord community where you can interact with developers and moderators who will be happy to answer your most pressing questions. For me, 103% gains in one day is enough to pique my interest. The jury is out on whether or not the CARTESI team has a solid roadmap for a sustainable future. But from what I can tell, there is a lot of energy and passion behind this project, and definitely worth keeping an eye on. So that's pretty much all I got for you guys today. Just a quick update. I did 2 videos back to back yesterday, so I wanted to keep this one brief. And so CARTESI, something to keep an eye on. So the CARTESI coin is actually green right now, and if you look at this candle, it's quite impressive. Quite impressive. Very rarely have we ever seen candles of that size. So this is the 2-hour chart. This is not the 1 minute or 5 minute chart. So, and it looks like we're hitting green candles again. So CARTESI to the moon for all you CARTESI fans. And I guess I'm a new CARTESI fan too. Have a good night, everybody. Take care.